This week hasn't been a fun week, hence my dramatic glasses. Yes, this week has been a red week for a vast majority of my portfolio. Today is the 18th of February 2021 and there is blood in the streets. I'm going to go through some of the things that I've learned from working through red days, what you should do, what you should look out for, and I've got some tips and some advice. Let's go. Hi everybody, welcome to Business, Trading and Money. My name is Mary and today's video we are discussing red day. Before I go any further, please can I get you to hit the thumbs up button because it helps with the algorithm. I'd very much appreciate it. I put a lot of effort and time into these videos because I do love doing them and I love sharing what I've learned so far. Okay, so today, this week hasn't been the best. I mean, I would say that we've been pretty spoiled since the market dropped last year in March 2020 up until now. I mean, there's been a few minor blips along the way to, you know, the moon. But I would say this week has been a bit of a surprise. It just came out of nowhere. The week just turned. I think a lot of, obviously, the economics of America, things that are going on there, the C word, and Texas and the cold blip that's also happening. I think it's all playing an effect. Maybe the market, because it has been so separate from everything else, that is the world and what's going on, it's very much having a little bit of a breather this week. These minor downward days or weeks can happen, and it's all part of the game of the market. We can't forever have things going up, it just doesn't work. So we need to have a plan and an idea and a strategy on how to go about going through these days. So this video, we're going to discuss that. So as mentioned in my intro, I will do a video of what I've got in my portfolio at the moment, but I do have a separate day trading portfolio, a separate swing trading, and a long-term investing portfolio. And all of them kind of suffered this week. It's been a bit emotional, I'm not gonna lie. You know, everyone's happy when things are green and everything is up, but when there is blood in the streets, bread everywhere, and we're getting our asses whooped, I would say that it's not so fun. But there's ways that we can turn this around and make it become a positive thing, because what I've realized over this time is that the down days are the days that mean that we can make the green days even better. When things are good and everyone is saying to the moon, we're all smiling, there's a lot of green, get out. That is the time to sell. You may want to sell half and wait and see if it runs up some more, but get out when it's green, because it means you've got profit. It means you've made money. It means it's good. It means you're doing good. Get out when it's green. And I've done this whereby I've pretty much looked at my portfolio, seen it very green, been happy, and then come back a week later and it's down. Like, it's down. Things this week is a prime example, NEO. That stock I was up a lot of because I did buy it. I managed to buy quite a lot of shares, I would say around about $50. And today, NEO managed to get really close to $50. So I could have had the opportunity of selling at 60 and then repurchasing down at 50. But with NEO, for me, it's one of my longer term plays anyways. I'm not planning to sell out of NEO, but it's just an example of how, if you are going to swing trade something like NEO or day trade something like NEO, you capture your profits as soon as you can. You know, obviously you have your target goal of where you need to get it, and once it reaches that, it's important to take your profit or capture half of your profit, get some out, so that the whole move isn't just wasted. So we must remember, when we're like this, we sell some of our shares, take some of that profit, and then sit tight and wait. So once you've captured your profits in those green days, be patient. Again, if you are doing a swing trade, this is namely for you. If you're doing a swing trade, be patient with those profits. Just keep them there. When time comes, when there's a red day or a red week or a red month, hopefully there's not a red month, but this week, obviously, it's time to go shopping. You need to keep the cash for the red days, because red days, things are down. At the moment, there are discounts on all of the above stocks that I've mentioned. I'm going to put some here. These were at highs. I have them in my portfolio. They were at highs. They are now not. So now is the time, if you have purchased them at a higher point and you believe in the stock, it's not a meme stock, there is actually some weight behind the stock, it is possible to average down and go shopping and buy some more. Because quite typically, the market is a cycle. It ebbs and flows. It goes and comes. It goes up and down. So now we're in a down, so we are hoping eventually it's going to go back up. And obviously, if you've bought now, those people that captured their profits when we were all smiling and have a bag of cash sat there, they can now go shopping and get things at extra cheap prices. It's like they're going to a discount shop and buying all the stuff up. And we're looking at them like, I could have got that on sale, but I paid full price. Keep the money for the down days and go shopping then. Look for value. Palantir is a prime example that things don't just always keep going up. And you must remember that when trading on the stock market, things don't always just keep going up. There will be that pullback and you just have to be patient for it. And you buy during the pullback. I guess that's where the phrase buy the dip comes from. We sometimes get obviously FOMO and caught up in the whole excitement and to the moon and 70% returns, that we just want to jump in when it's green and we're all smiling. But I've learned it's a good idea to wait for the pullback. You have more chance of getting your green day that you require. An example of another pullback you will see is in Bitcoin. Again, that's another FOMO type of play that I feel anyway, and everyone's jumping into it. I remember just a few months ago when it hit 40K? And then it just dropped back down to 30. Like when it was at 40K, I was like, oh my God, it's high, blah. I didn't go into it, I waited. It dropped back down to 30K. Kind of freaked out. I was like, no, this is not my time. And then lo and behold, we're at 50K now. So now again, another opportunity. It's going to be 50K. I'm sure it's going to pull back. We wait for that pullback. It will come. And buy in at that point. There's no point buying in high. Always wait for the discounted price. Next, diversity. A well-diversified portfolio will save you when things are crazy. When there's blood in the streets, not everything will be going down, not everything will be going up. Like, you need to have that balance, and it's really signified that today. So I think it's quite important to have a mixture, obviously, of your growth potential stocks, a few woohoo stocks, speculative stocks, and then you need to have your safe stocks that just trend on that range, which is typically your dividend stocks. They don't really move that much except for like a $1 here or there, if that. So you need to have a mixture of those. Plus, you need to have several plays going on at the same time. So for instance, today, everything was, a lot of my stuff in my portfolio was down, but certain things didn't. Like I had CCIV in there, and obviously they still got their deal with Lucid going on and they're going up. I know a lot of London stocks did quite well today as well, that a lot of groups were happy about. And obviously you have to remember that certain stocks work in a group together. So if you're going into EV and therefore you've got like the actual vehicles and then you've got charging points, these all will probably contract at the same time. So having that variation enables you to breathe a little. Whereas if you had everything that was just all EV, you would be freaking out right about now. You need to have the diverse portfolio. The boring plays won't necessarily be fun, but they also won't start violently having diarrhea everywhere on your portfolio when the rest of the market does. Even Apple went down today, but that also means it's time to buy some more Apple. Next one, sit tight. It is painful, And it is harsh, and you do feel like you're being beaten and whooped about by the market when things go down and you're not really ready for it. These corrections, they happen. And there is somewhat no point fully panicking about it. It happens. So when it does, as long as you've got your plan before going into your stocks, you will know that this happens and it will correct itself and go back up. Things are never down forever unless it's a really bad company. but even Luckin Coffee, do you remember them? When they had their controversy, you know, they've been back up several times this year as well. So it's just another example. Things don't stay down forever. It may take a while for it to correct back up, but every stock will have its day. And as long as you're playing safe stocks that are not crazy and fully YOLO, you will be fine. When things are down, find a catalyst of something that's gonna go up. Today's example, again, because I played it, was the CCIV. Obviously, this is a continuous catalyst that's kept going, kept giving us, you know, lemons to squeeze. It's been a good play. When everything was down, I was still able to earn some money on the CCIV with regular day trades that I've done with it. And it's worked out. So it's not all been down. And though, just like CCIV, there's many other stocks that have also had good returns today and on red days. It's not always bad. But this again goes back to having a diversified portfolio that covers a variety of things, even though that CCIV is a SPAC and it's an EV play, but it's still one that had potential to go up. But it gave me that diversity. When in doubt and you are in a red day, just walk away from the table. It might be sometimes a good idea just to take a step back and not to look at it. Just don't look. Wait for it to recover and come back the next day. Or research some new stocks that you can go into, or find possible plays that are coming out in coming weeks that you can benefit from. In your research, you may even find something good to buy that's going to rebound quite quickly. So use the time wisely to do something else. One thing that I also want to highlight is, before averaging in and buying down at a cheaper price, just make sure, I know it's hard to do, but just look for signs that the market is about to rebound and come back up. It's no point buying a stock that's still dipping, because you can get it at a lower price, you know. Another one is, obviously, if things are dipping and continue to dip and continue to dip and continue to dip, you'll be left with the bags. So it's up to you if you want to decide to leave that trade. Obviously, it's a good idea if you have these plans in mind, first of all, and if you know that you're going in long term with this, or just short term, or if it's just a day trade. Swing trade, you tend to know your range, you tend to know where the stock can go down to and up to, and you set your stop losses for that point. Have that in mind so you know how much you can potentially lose and follow that plan. Otherwise, you can end up being caught holding heavy, big bags, and you don't want that. You don't want that. My sundial at the moment, this is an example of holding a bag. I don't know how much of a big bag this is, but I see the marijuana space going quite well in coming months and years. So I don't particularly consider it to be a massive bag, but we'll see. And to be fair, it's not where I am with sundial at the moment. I didn't buy it at extremely high, but compared to where it has been, it's quite high. So for this particular one, I'm gonna hold the bag for a while and see what happens. I've not gone in and invested like 1,000 shares. I think we're talking about 200 shares. So it's not those. I captured my profits quite earlier on in sundial and I ran because I saw it as a bit of it was a meme stock, you know. That whole sector was on fire last week and I took opportunity with it and I quickly ran in and ran back out. I ran for the hills with my profits. And yeah, I just left in 200 shares and now they are bleeding on the side of the road. In conclusion, guys, these red days will pass. We'll see green days soon enough, as long as the market doesn't crash. It's even when it did in March, it rebounded. It created opportunity for everyone. We'll see green days again. And it's the planning that you do now in the red days that sets you up for the green days. So think about it. Don't sell out, and ultimately you've not made a loss until you sell those shares. So stick with your investment plan and don't let panic destroy them or change your decisions of what you're planning to do. And selling during a market correction will only lock in that loss, Whereas if you wait it out, you have potential for it to return to the top. And don't go 100% into all your trades. Keep some money back. We don't need to make money instantly. It can be done gradually. It's the safer option. Otherwise, if you do go wrong, you lose everything, and it's even harder. So gradual. If you are unsure about which broker to use for trading, then I have a video, which I'll put here, that you can watch, and it explains trading 212. You can also click the link below, and you can register and start trading as well. I would recommend doing some homework first. Don't just start trading. We can all have fun and hopefully not lose any money. I am just sharing my opinions. I'm not telling you to go and buy any shares or stocks. You don't have to do that. I'm just sharing my opinion. This is just we're just learning. Guys, we're just learning. I'm not telling you to invest your entire life saving. So don't do it. Someone in the comments the other day said I should say this, but we all know. And I put a huge disclaimer down in the message box. So don't sue me. So thank you so much for watching. I hope to see you at my very next video. My name is Mary from Business, Trading and Money. So corny, but I love it. I love a bit of corn. And yeah, I'll see you at the next one. Bye.